Let's talk about 401ks, because you at IAC have come out very recently with a plan around this, something you are going to sort of have all of your employees sign up to. Talk to us about why it's so important and why you're doing it now.
Sure. According to Investopedia, one of our properties, 38 million Americans don't have retirement accounts. We've read reports 25% of Americans aren't remotely ready for retirement, aren't prepared for retirement at all. And there's this incredible tax incentive from the government, which is you can put money that you earn today, and the company can match that money that you earn today, pre-tax, into an account, and then it can compound tax-free for a very long time. The value of that is absolutely tremendous to an employee, and allowing a lot more people to participate in the economy, participate in equities and capitalism. And people, we realized we weren't taking advantage of it enough. People weren't taking advantage of it enough. So we said we're going to match 100% of what employees contribute up to 10% of their salary. And the amazing part of that is, first of all, it helps people put a lot of money away for retirement. It encourages people to do this. But also, it is the highest earners in the company were already maxing out their pre-tax allowance, or their total allowance of what they could put into a 401k. So this entire benefit goes to the lower earners in the company and starts to help bridge the income inequality gap, not just by moving money towards these people, but also helping them participate in markets where value creation has occurred, and where a lot of that value creation has not gone to lower earners in companies because they don't participate in equities the same way that higher earners have. And I think, as everybody knows, equities have appreciated 7% a year for eternity.
So let's talk about that, because one of the questions you always get asked is when you're going to take certain bits of IAC public. Obviously, Vimeo is sort of ready to go, Dash similarly as well. We're in a red-hot IPO market at the moment. We've seen a lot of big companies come public, and a lot of companies like the IAC companies in terms of there is a touch point there with technology. I look at things like Beyond Meat up 300%, and no one really knows exactly what they do. Like, why not go now? You have these assets that look ready to go to market. Why not take them public?
I think I know what they do, by the way. It's veggie burgers.
Yeah, but it's fancier than.
Yes. Look, the thing about taking a company public is it's not a end goal. I don't think it should be an end goal for any company, frankly. It's certainly not an end goal for any of our companies. It's a nice stepping stone, and it serves a purpose. You need access to capital. You need a currency. A currency can be used for compensation or acquisitions or combinations or things like that. If you need those things, going public makes a lot of sense. The concept of red hot and capturing that market, that's not something, that's a short-term phenomenon. We're usually playing a longer game. So our goal is to figure out when a company's ready to go public. If some of those factors exist, which is they need some of the things I mentioned earlier, then we'll consider taking a company public. We've talked about taking Vimeo public. We talk about it reasonably often, but it's just, I don't think at this moment the right thing for Vimeo.
Will it be the next one to go?
I think it probably has the best shot at the next one, but I don't know for sure. There's other ones too. I mean, Dash is doing incredibly well as a business too right now, and not impossible for a business. I think it's still too small to be public, but it's not impossible for a business like that to go.
And talk to me about some investment or M&A opportunities. You have a couple of $1 billion in cash. Obviously, you have a very good track record buying and investing in other companies. What are you looking at?
Yeah, we're looking at a lot of things always. I mean, one thing we're doing a little bit more, or considering much more seriously that we hadn't really done as much in the past, is some minority investments. But minority investments in ways where we can increase ownership over time. It can be a long-term holding for us. We can add real value to the company. We can have a meaningful position, a meaningful role in the company. And as we've looked at the market and the way the market has developed, there's a sort of gap of things that have been a growth stage that has been unavailable to us as a majority or control owner. We either have to go much earlier or much later. And that middle stage where tons of value is being created, great companies are being built, great consumer products are being built, we do want to participate in that. And we've considered doing that in a minority way now.
In which sectors?
In lots of sectors.